Hi, Ric Edelman here with the RIA Digital Assets Council, and I'm really excited to be joined today by Anthony Scaramucci, well known on both Wall Street and Washington, the founder and CEO of SkyBridge Capital, billions of dollars in assets under management. A couple of quick questions for you, Anthony. First off, SkyBridge has a really long and very successful investment record. What motivated you to launch a Bitcoin fund?
Well, Rick, we did a couple of years of research. When I left the White House, I had written down in my notes based on some conversations that we were having over at Treasury about the digitization of the US dollar. And I wrote down in my notes, I needed to go back to New York and to figure out what was going on with Bitcoin. And so the first thing I did was I bought the URL skybridgebitcoin.com back in 2017. And we did a tremendous amount of research, but I said, if three things happen, I will launch a Bitcoin fund. Number one, 100 million plus users. Number two, the regulation, at least from the North American perspective, America and Canada would be roughly benign. That's more or less happened. And then the third thing, Rick, was the storage. If I thought we could store it in a safe way from an institutional perspective. And so all of those things came together in the middle of last year, the second to the third quarter. And so we put the originating documents together. We launched the fund in December. We opened it to outside investors in January. So we put $25 million of our own firm's capital in the fund December 22nd. We have over $600 million in capital now across the firm's assets. And the fund, as you know, is doing quite well. And so sometimes it's better to be lucky than smart, Rick. I think our timing was quite fortuitous.
And a note of disclosure, I too am one of your investors in the Bitcoin fund, Anthony. And so, I think the approach that you're using is certainly worthy of consideration for investors. I certainly have reached that conclusion myself. One other question I want to ask you.
We appreciate that, by the way. Thank you, Rick.
Well, it's my pleasure, as they say. Let me ask you the second question, Anthony. What would you say to financial advisors who are not yet recommending digital assets to their clients?
Well, I understand them. I have empathy for their reluctance and I have empathy for their skepticism. I would tell them that I started as a Bitcoin skeptic. It took me a while to get comfortable with it. I would tell them to please study and look at Metcalfe's law. And I think they will draw the conclusion that I did, that Bitcoin is a scaling monetary network akin to what Amazon has done as a retail network, or Facebook has done as a social network, or let's say Google as a search and advertising network. And when you stop and consider the mechanisms, the cryptographic nature of Bitcoin, the dissemination and transfer of these coins over the blockchain, the impregnability of that code, and the fact that Bitcoin has been attacked by 8,300 other cryptocurrencies and yet maintains its status as the apex predator of all cryptocurrency, it having anywhere from 65 to 70% of the total market capitalization, depending on the day that it's trading. When you stop and you look at all of that stuff and you do the research, I think you can get very comfortable with it. I would also suggest to RIAs, you don't want to leave your clients out. I'm not saying put lots and lots of money in, but even 0.5% to 3%, something like that, just letting clients know that you understand what's going on and you don't want them to miss that movement any more than you would have wanted them to miss the FANG stocks over the last 5 years.
As our mutual friend Mark Yusko says, get off zero.
Yeah, exactly. I think it's a great comment. And Mark is a great public speaker. He's a very thoughtful guy. And I attribute his lessons to me, frankly, the Winklevosses, guys like Ross Stevens at New York Digital Investment Group, Raoul Powell, who you know, the legendary macro investor that runs Real Vision. All of these guys are sort of in my college of cardinals of cryptocurrency. And so what I would encourage advisors to do is to do the homework. Don't be a naysayer. This is a product or a industry, if you will, or a store of value, however you want to describe it, that's gone from zero to $1 trillion in 12 years. So sometimes the market is right. And for those naysayers that say, well, it's too good to be true, let me just point out that Amazon is too good to be true. $10,000 in Amazon in 1997 on May 15th, when it went public, is now worth $21 million. Apple is too good to be true. You could look at the price performance of things that are adapting exponentially to the growth of these networks and on the exponential curve of Metcalfe's law. And you look at every one of those things and say, okay, they look too good to be true. And so Bitcoin is like those assets. And I don't want my clients to miss it. And that's the reason why we got started. And like you just said, and Mark says, get off of zero, buy a little. Ric Edelman owns it. I own it. And we own it for a reason. We've done a lot of fundamental research on it. But you too need to do your own research and recognize while it's a volatile situation, while it's being adopted, we are in the early adoption phase. It's very early. And if you're a long-term investor, I think you're going to be very well rewarded in the space.
And that's, of course, what we're trying to do here at READAC, the RIA Digital Assets Council, provide that fundamental education and information so advisors can learn what they need to know so they're feeling comfortable about investing in this space of blockchain and digital assets. Anthony Scaramucci, thanks so much for joining us on READAC Television. Appreciate you being here.
Thank you. Great to be here.